Welcome to this wonderful webinar again today. And you guys know what we do. My name is Gotcho, uh, and we are here from Godo Capital Markets, Nigeria. So it's a pleasure, for us to meet once again. We'll do this 5 p.m. every Saturday. And you guys know how we do it. We first of all start with our economic calendar. You visit our website at godocm.com, and we go to our economic calendar and look out for what we have for the upcoming week. It's very important to look out for what you have for the upcoming week, so you don't get caught by surprises. Okay, to avoid surprise and attack in the market. So you have to be very much aware, what is coming up in the market, especially if it has to do with high impact data, that affects growth and inflation, which is the main concern when it has to do with central banks that drives the financial markets. Okay, so good. So on our economic calendar here, the 20th of April, Monday, look at the data we have. We have PPI data from Germany, a very important one. Germany, contributes about 25% of, economic output when it has to do with the Euro area. Okay, so it's an important one to, keep an eye on the German PPI data, month on month and year on year. And that same Monday by 1:30 p.m. Nigerian time, we'll be having the CPI data for Canada, core CPI data month on month and year on year. A very good one. Let's see what happens with inflation. The leading and coincident data, are showing me a decline, in data. So I don't expect, a strong move, or maybe an uptick in the inflation data. So even when you look at what we're anticipating here, the previous is 0.4% month on month, and we're expecting a decline of 0.2%. So on the year on year is where we're anticipating an uptick. But let's see uh what happens. Possibly it could move around, above, this figure, simply because of, the war in Middle East. Let's see if that actually, prints in the recent data or maybe in upcoming data. But what we can see here, the focus is expected to be low, but I'm also being open-minded to expect, a higher, uptick, in inflation data for Canada. So on that same Monday by 5:40 p.m. Nigerian time, ECB President Lagarde is going to be speaking. By 11:45 p.m., about when the market has closed and about the open, we have a CPI data for New Zealand, Q on Q data, quarter on quarter, and year on year data. Okay. And Tuesday, 21st of April, we have the unemployment labor market data, for the UK economy, climate account change. Climate accounts change, it's just like unemployment, initial jobless claims or maybe unemployment, but people who are claiming unemployment, this is just the data in terms of the UK, that reflects what people who are unemployment, how many are they? People but are seeking support from the government. So that's what climate change simply means. Okay. Because I know so many of you may be seeing climate change and wonder what is this data. So we have the retail sales data month on month, core retail sales month on month for the United States economy, which is a very important one. We're going to be confirming what we have in terms of the leading economic data. It's going to be confirming if we are having false signals from the leading economic data. That's why you don't jump in when you look at leading economic data, because it can be false. So imagine you are seeing, PMI data are showing you that it's the U.S. economy is improving, but retail sales can come and be on the negative side. So when you use leading economic indicators, to predict, just get ready, to act. You use coincident economic data to not act, because that tells you in real time what the economy is doing. So think of leading economic data as a weather forecast, and coincident data like when the storm when the cloud is now very dark and the storm is coming. Okay, that means you are ready to click the button before the heavy downpour. So that is it. As we are moving on 22nd of April on Wednesday, we'll have CPI data from South Africa, month on month and year on year, and unemployment rate data from Sweden. Okay. So we also have the retail sales data coming from for the South Africa as well. And so as we keep on editing the data. Okay, so guys, this is for Wednesday, right? So as we keep on moving, we'll have ECB executive board meeting, very important one as well, for Euro traders. And for 23rd of April, Thursday, we'll have ROBNZ, credit card spending, very good data to also keep an eye on, but don't get, too attached to it. Watching credit card spending by, citizens is very, very good. So you try to understand, the spending strength, of the consumers, which is important. It gives you if the economy is actually growing, and also gives you signs of inflationary pressures in the economy. Okay, so that gives you an idea, part of an idea of what the central banks are most likely going to do with interest rates in the future. So as we move in, we have S&P manufacturing and services PMIs from the UK, and retail sales data from Mexico, those who trade the Mexican peso. And we have unemployment, initial jobless claims for the United States and continued jobless claims for the United States. So on 24th of April, being Friday, we have the consumer confidence data for the United Kingdom, and then CPI data for Japan. Okay, the Japanese yen has been very bad in terms of strength, economic performance. It's been, I think, the weakest currency so far across each peers. When you look at the eight majors: Canada, Swiss, USD, Aussie, NZD, and the rest of them. Okay, so that's on Friday. SMB Vice Chairman is also going to be speaking, a very important one to keep an eye on. And also, for Brazilian real consumer confidence data is also going to be coming out by 12 noon Nigerian time. So by 1:30 Nigerian time, PM, we'll have retail sales data and core retail sales data, month-on-month data, very important one. And by 3 p.m. on Friday, we're going to be having consumer sentiment and expectation, Michigan, from the University of Michigan for the United States economy. So that is what we have for the economic calendar. Okay, so let's quickly move on to what we have in terms of data. Okay, so for data, we look at the USD first. Now, in terms of the USD, the leading economic data has been, showing us, a mixed strength, not, very strong support for the United States dollar, and not maybe in terms of weakness as well for the United States dollar. So that is giving us a mixed signal, like I said, for the USD. So US dollar is not part of the currencies that we're looking at for in terms of bullish moves, because what I can see even from the leading data, when you look at things like consumer confidence data, this is leading. So retail sales data is going to help me, finally understand what we are anticipating for the United States economy. Currently, if we are going to be selling, the dollar, because consumer confidence is very, very bad. You can see that negative 10, yeah, from what we can see here. So very, very, very bad. And also currently in terms of manufacturing and industrial production, which is a coincident economic data that tells us what is currently happening. And all of them are on the negative side. So we can see that. And then when you look at, even the labor market data, very bad. So that's why I'm saying it's mixed at this point in time because of what we're having on retail. So retail sales is going to be a boost in terms of my sentiment. Already you can see Euro USD pushing to the upside, Aussie dollar pushing to the upside. That is because of the current market sentiment. And when you also combine that with inflationary data, so you will see that uh, so let's see what happens. That's why I said is a kind of a mixed signal. So ISM manufacturing prices, which is a leading data, and non-manufacturing prices, leading data. So I want to see what this the retail sales data is going to look like. So that's what it's going to tell me actually if you know is inflation really coming in, which is going to be a message. So I would now like to understand what would be the tone of the Federal Reserve because context matters. I would like to know what part of their mandate that they are trying to focus on. Is it inflation or they are more committed to growth paths? Okay. So that is it for United States dollar. So for United States dollar, I'm expected to be bearish on US dollar. Okay, but before that, we could be seeing some corrections ahead of the week on Euro USD, pound dollar, Aussie dollar, and the rest. But uh, they are expected to be bullish, on the long run. Okay. So the next one, so if I go technically on the chart, so there are still a kind of some update I want to do on my sheet. So we are not going to be heading to. I'm just going to be listing out the pairs in terms of there are updates I want to do on the sheet. So we're not going to be making use of the scorecard, but I'm going to be updating that on the Telegram handle at Godo Africa on Monday. So that is it. I'm doing that ahead of the weekend. So for GBP, so still a mixed signal, but quite weaker from what I can see from current market data, in terms of GBP. We're expecting a weaker GBP, but consumer confidence data is showing us a future strength coming in. So let's see what future data that retail sales data is going to show us in the future. And that could confirm for us if British pound is definitely maybe going to be a strong one on our books. Okay. So for euro is one of those currencies I want to be buying ahead of the week. Okay, current data are showing me strength, in euro, and especially geopolitical, updates is actually kind of coming down. Yes, this weekend we are seeing some kind of mixed signal again, but the market is you know doesn't much listen to words or rhetoric. The market is waiting for action. Oil dropped about more than 11%, on Friday when the Iranian foreign minister, Aragachi, posted that on Twitter that which Trump confirmed that the Strait of Hormuz is now open, okay, for vessel navigation, and that caused you know prices of crude oil to crash, okay, because supply disruption that's what it means is about or coming to an end or no longer a headache for the markets and oil market and transportation as well. Europe is heavily dependent on oil. So anytime we have energy crisis, Europe suffers a whole lot. So that news is a good one for Europe. And so all these things are giving us kind of confidence in buying euro against some currency like you mentioned. We're expecting euro dollar to push the upside, but maybe after some corrective structure headed into the new week. And if you look at data, you would see retail sales data, just year on year slightly on the negative side, not much. When we look at consumer confidence, leading economic data, we confirm that with future data is coming in terms of retail sales. Look at manufacturing and industrial production, very positive. Okay. So these things are not actually, and also inflation data 0.7. So you can see it. Inflation rates currently. So these things are even unemployment, yes, elevated, but you can see not rising at a solid pace. Okay, so these things are giving us clues and signs of what euro is. Okay, so if I go to the charts, I know this is something a whole lot of us are waiting for. So if I go to the charts for euro USD, for example, so what I'm anticipating for euro USD. So for euro USD, this is what I'm anticipating, the markets. So any corrective structure is going to be an opportunity to push the downside. Maybe correction again downside. So we should be expecting something similar, to this. Okay. So after that, that will be giving us an opportunity to push back again to the upside for euro USD. Right. So good. Uh let's go back to our Excel sheet and let's look at AUD. AUD is one of those currencies that I'm looking at, to buy. AUD have been, benefiting, even throughout the energy crisis because it's favoring AUD as one of the major exporters of LNG, liquefied natural gas. So even while the tension is still down, okay, risk is coming back into the market, and Australia is also going to be benefiting, all right, as a risky currency. And when you look at data is very strong and very good, okay, being supportive of Aussie strength. You look at industrial production, highly positive, both year on year and month on month. Manufacturing production, that's massive. So consumer confidence, telling us so we are not just going to act with what consumer confidence is telling us. You will see, you know, um, retail sales data that are going to be coming in. That is going to be confirming to us. Okay, let's see what happens. All right, and when we look at commodity prices, very high, and so that is it. So for I'm also going to be looking at Aussie dollar to the upside, and not just Aussie dollar to the upside, even currency pairs like pound dollar to the downside. So if you look at Aussie dollar, let's move on to Aussie dollar. So similar thing, we mentioned in terms of uh euro dollar. So any corrective structure here, price expected to push back again to the upside for Aussie dollar. So pound Aussie, sorry, I told you guys, also look for shorts on pound Aussie. Okay. So pound Aussie, we could start having a corrective structure. Already you could see that pushing to the downside. So any corrective structure, whether a small one or a deep one, maybe something similar, to this nature, maybe that can happen. When that happens, also look for a continuation again to the downside for pound GPAUD. Okay. So NZD, a mixed one as well. Data, not just data is mixed. Because when you look at consumer confidence data, which is an expectation, of a leading economic data of what growth is like. When you look at that, it's expected to be down. Current retail sales data is showing us a negative for the month on month, and year on year slightly negative as well. So NZD is a mixed one for me. So in terms of AUD NZD, I'm even going to be looking at bullish moves for AUD NZD. Okay, so if you look at that, so you can see what is happening on AUD NZD. So for AUD NZD, any corrective structure, will be an opportunity to look for buy setups for AUD NZD. Okay. So we look at CAD, one of the weakest across board as well. Okay. When you look at CAD, you can see industrial production and negative. You look at both the year on year and month on month, and which are coincident data, what is telling us what is currently happening in the economy, manufacturing production also down, retail sales month on month down as well. Okay, so only retail sales year on year is slightly positive, but when you put other data in consideration, you see it's on the negative side. So even leading economic data for inflation, you look at PPI data, very negative. Commodity prices, slightly positive, and so when you put all these things together, you begin to see, uh, you know, everything is pointing down towards a negative Canadian dollar, and potential rate cut could be coming for Canada. So let's see what happens. Just one data is not going to just make the Bank of Canada to begin to consider cutting it. We need to see series of data, 2 to 3 times, of a decline. Then that should, signal to the Bank of Canada. I think it's high time to reduce, you know, uh, bank lending rates, which is interest rates. Okay, so I'm going to be looking at currency pairs like AUD card, to the upside, Euro card to the upside as well. Okay, so let's look at AUD card to the upside. So let's structurally, what are we seeing for AUD card? So any corrective structure is going to be an opportunity for us to buy a unit card. So this structure is in the making. So let's wait to see what happens. Maybe if we see something like this down, that could give us an opportunity to buy, to the upside for a unit card. I think we should be expecting something similar, maybe to what we have seen here, at this point. We should be expecting something of this nature. Here again, the price will continue pushing to the upside for Aussie card. So the next one we mentioned is Euro card, right? Good. So for Euro card, let's go to see, a complete structure here. So if we get any corrective structure, one more drop, we are going to be heading to the upside. Okay, waiting to see something similar to what we have seen here, and then it's going to be an opportunity to look for buy setups on Euro card. So Swiss is also one of those weak ones we are seeing in the book. So when we look at the data here, we look at industrial production, very negative, both year on year, month on month. So that is telling us what the economy is doing currently. Manufacturing production very bad at -4. Retail sales month on month, very healthy. Okay, but when you look at Switzerland, which is a very very export driven. So things like retail sales data is not going to matter much to the SMB. They are looking at what businesses are doing because it's an export driven economy. Okay, consumer confidence data is showing us very, very, very strong data. So let's see what happens in the future. Okay, very, very strong. And retail sales is still confirming what consumer data is showing. So let's see if more retail sales data is going to be strong ahead of time. But I think the SMB currently, in their forward guidance is more concerned with, business. So that is the context for the SMB. So my focus is on, data like industrial production and manufacturing production. Okay, so but it's mixed, but all the same time is also negative for me, in the book. So if you look at Swiss, paired up with currencies like Euro and AUD as well, that should be also giving you a bullish move in those currency pairs. So if we look at AUD Swiss, for example, so you understand what I mean as well. So any corrective structure, to the downside, it's an opportunity to look for bullish move. So we are anticipating to see this is something similar like this, what is unfolding here. So once this corrective structure is done, AUD switch is going to push back to the upside. Okay, at least up to this level. AUD switch is one of the currency pairs I'm going to be paying attention to, at least up to 0.565 level. That is where we should be expecting AUD switch at least to tap minimum. Okay. So the next one I mentioned is Euro Swiss, right? So Euro CHF. So Euro CHF, a very complex one. So let's see what happens with Euro CHF. So the corrective structure here may take some time, but after that, this is moving like it's going to be a corrective structure for this impulsive move here because here we have got an impulse correction. Here is becoming a 5-wave structure. So let's see what happens. We may, get a slight push to the upside, maybe just to give us something similar to this again. One more drop and then we'll be heading back to the upside. So maybe Euro Swiss, I'm going to leave it for now and focus on AUD Swiss because even in terms of strength, I'm favoring AUD ahead of Euro. AUD is more stronger than Euro, at this point in time. Okay. So then the last one, which is a JPY, which is the weakest in my book. Okay. JPY is the weakest currency I have in my book. Everything about yen at this point in time is very weak. And the way the Japanese economy is, they expect their currency to weak because it's a highly export-driven economy. Okay, because when your currency is weak, your products becomes cheaper. For your customers over your border, across your borders. Okay, so when you look at data like industrial production, you see the negative side being negative, slightly negative for industrial production year on year. Month on month is highly negative. Look at manufacturing production. The change data here is also slightly negative. Yes. So we look at retail sales as well. So you can see negative 6.1. That's a very tough one for the Asian powerhouse. So you could see uh consumer confidence, which is a leading economic data, is showing us what is going to happen in the future, with growth, consumer. So, and we also already seen weakness in retail sales. So, that is telling us a very, negative JPY in the book. So you are like showing us that JPY is very, very, very down currently. And if we look at inflation rates, no still on the negative side. Inflation is still on the negative side, and unemployment not a very big issue for Japan at this point in time. Okay, so we're seeing what is happening. JPY is weak. So when you look at JPY, which pairs are you going to currencies are you going to pair it with to give you the pair? Still, I'm also considering euro and AUD, and euro. Euro yen, AUD yen is expected to be, my favorite ahead of based on data. So when you look at AUD yen, so AUD yen, so any complete correction is an opportunity to buy. So correction down and then an opportunity to look for buy setups to go. So you can see it's already headed to the upside. Aussie yen and as well EU yen. So that will be the last one we have. So Euro yen also expecting a push to the upside. So, but before that, any corrective structure is going to give us an opportunity for another downside again, and then finally we can head to the upside. What are we anticipating in euro yen? Price could be wanting to give us something similar to the here is an expansion. Here we got impulse that came into the structure correction, impulse. So any clear corrective structure here, something similar to what we have seen here, that will be giving us an opportunity to look for buy setups against the upside, and that will take us above 188.320 levels. Okay, so that is it in terms of what I have for us this week. I believe it's a very good one. We enjoyed it. Watch out for this recording on our YouTube handle at Godo Africa. Subscribe and trade carefully. Remember, to trade with Godo Capital Markets, the best forex broker right now at the moment. Okay, Godo is the best forex broker right now. Fast deposits, fast withdrawals, tight spread, good trading environment, and almost 247 customer support. Okay, if you go on Google and watch our review, about our clients here in Nigeria and across Africa, you see a very good review, in terms of how traders are being treated. Okay, so it's a very good one. So thank you very much, traders, and remember to fund your accounts and also apply proper risk management. Trade carefully. See you this time next week. Bye for now.